What's up, guys? Bang, bang. This week's Bitcoin update is coming to you live from the road, New York City. I'm traveling this week, but I wouldn't miss these updates. You'll probably hear my 9-month-old daughter going in the background in a few minutes, and also my wife. She keeps snacking, so you'll probably hear a lot of crinkling of potato bag chips too. Don't forget that these updates, they're brought to you by FTX. You can click on the link in the description to learn more about them. Let's jump into this week's update and see what the hell's going on with Bitcoin's price. To get started, we can see that Bitcoin is now trading just below $20,000. Not exactly what we want to see. Bitcoin's market cap now about $375 billion or so. The inflation rate still sitting at 1.76%, and over 90% of Bitcoin has been issued into the circulating supply. We can see that the real exchange volume has come down significantly, and now less than $6 billion being traded in a 24-hour period. In that same time period, miners have been paid $18.4 million to continue to secure the Bitcoin network. GBTC is now trading at a 32% discount, and Bitcoin is now down 71% from its all-time high of $69,000 back in November of last year. If we compare Bitcoin, gold, and the S&P 500, we can see that Bitcoin down 60% over a 12-month period. But over a 2 to 10-year time frame, Bitcoin continues to outperform both gold and S&P 500. Then we can look at Bitcoin's price closing history, and sitting below 20,000 means that Bitcoin has traded above this position 610 days of its lifetime, which means that if you had bought and held 87% of Bitcoin's days and held it until today, you would still be in profit. Then if we go and take a look, Bitcoin, gold, S&P 500, NASDAQ, and TLT, we can see that the compound annual growth rate of Bitcoin coming in at 113% continues to outperform these other assets, and Bitcoin's 5-year Sharpe ratio just below 0.8 means that if you add it to a diversified portfolio, it would have an incredibly positive impact. The last thing that I want to talk about is the energy crisis that seems to be playing out in Europe. Now, of course, this doesn't have a direct impact on Bitcoin's price. Not very many people are buying oil and dropping Bitcoin, or vice versa, buying Bitcoin and dropping oil. But what we do see is that the geopolitical chess game is underway. There's reports that are now surfacing that many countries like Germany and others, they are in a dire situation. We are seeing on the ground, whether it's individuals or businesses, they're reporting that their electricity bills are going parabolic. That obviously spells trouble going into the winter in Europe. But also there's other things that seem to be happening. There's reports coming out that Russia is now selling oil to China, who then turns around and is immediately just putting up the price. They're marking it up, and then they're selling it to those European countries. This allows the European countries to claim, well, virtue signal, that they're not buying Russian oil. But it also means that China, they're playing market maker, and they're making a damn good profit doing it. On top of that, we've also seen countries like Hungary, who all of a sudden stood up and said, we're not playing this game anymore. We're going to strike deals with the Russian energy companies because we need the energy in order to make sure our people are safe. Then, just in the last 48 hours, we've seen Russia come out, and they've said, you know what? Nord Stream 1, we're going to shut that bad boy down. We're having some technical issues. We'll let you know when it comes back online. Of course, there's all sorts of complexities involved in this, but when you see energy prices exploding upwards, that's a big problem. On top of that, if you wanted to actually drive GDP growth, both in the United States and globally, what would you do? You would have low interest rates and you'd have real wage growth, but we're seeing the exact opposite. Here in the United States, interest rates are going up while we're in a recession. On top of that, we're also seeing real wages. People are actually making less and less money. 16 of the last 18 months, they've made less money than they were previously. So this spells complete trouble. Now, why does that all matter? As the global financial system gets in a more dire situation, it becomes harder and harder for the Federal Reserve to actually raise interest rates and create tighter financial conditions. They say that they are committed to doing that, and so far, they've held true to their word. But at some point, they're going to have to pivot. They'll have to wave that white flag. The big question in finance right now is, will the central banks, both the Federal Reserve and those around the world, are they going to capitulate before the end of 2022? Or will this carry into 2023? And at some point then, we'll return to a loose monetary policy. Between 1940 and 2021, the average debt to GDP ratio in America was sitting around 68%. Now we have nearly 140% debt to GDP. This means that the central bank cannot raise interest rates to the moon. At some point, they have to stop. And we will return to that loose monetary policy. When that happens, Bitcoin, risk assets, growth stocks, and many other things that most of you have in your portfolio, they will likely then have a resurgence and a recovery and return back to all-time highs. But until that moment, the Federal Reserve, they are in control. And so far, they are continuing to punish the market in their quest to destroy consumer demand. It's working, but at some point they'll have to stop, and that's when I expect much better news for Bitcoin and other risk assets. I hope that you're enjoying these weekly updates. I enjoy putting them together, even when I'm on the road. But these updates are now brought to you by FTX. You can go and you can buy Bitcoin and cryptocurrencies with really cheap fees, sometimes as much as 85% cheaper than their competitors. They also recently introduced digital stock trading that has no payment for order flow and no transaction fees, so you get great pricing. Go check out FTX today. You can click on the link in the description. They continue to innovate in financial markets, and I think that you'll really enjoy using their product. Go check them out. Keep watching these weekly updates. I'll put out the next one next Saturday, and let me know in the comments if you're enjoying them and what we can do to make them better. That's it for this week, and I'll see you guys next Saturday.